Welcome to Tuttle Talk on 1190 AM. Now, live in studio, your host, local real estate expert, Andy Tuttle.
Good morning, Dallas, and welcome to Tuttle Talk on the Real Estate Radio Network, where we teach you what the rich and the banks do, not what they tell you to do, and where we dispel the misconceptions of financial wellness and the local real estate market and show you how focusing on a few principles really will help you spend more time on the things that are most important to you in your life, like your friends, your family, and the community. It's the most important hour of radio every Saturday right here on Clear Channel 1190 KFXR in the great state of Texas. I am your host, Andy Tuttle. So glad to have you here with us. Thank you for joining me. You can reach us at 214-736-9696. That's our off-air number, 214-736-9696. Or you can email me at questions@andytuttle.com. You can also become a fan of the show. That would be fun. We'd like that. At facebook.com/Tuttle Talk. And you can listen to this online at dfw1190am.com or on your iHeartRadio app. Also, we have a pretty awesome giveaway we're doing this month. So text to 72727. You want to text Andy T to 72727. So get out your phone, put in 72727, and then just click down in the comments and type in Andy T, and you will be entered to win a free month of electricity. That's pretty awesome, to be honest with you. That'll save you a lot of money. So enter that, text that number, 72727, and enter to win. I just got back from Mexico, so I may be a little bit coffee, but you'll just have to deal with that. It was a great time, beautiful weather. But I come back and I have a little bit of a cough and a little bit of I guess you would call it a vacation hangover. I don't know what else to call that, but I will struggle, power through. I struggled so hard on the beach for a week in the beautiful sun. It was tough work, but I did it for you and for my wife. You're welcome, sweetie. This has been a very busy week in the industry. It's actually been a very busy week here in America in general. And we are going to talk to two real estate experts, fantastic ladies, actually, pros at what they're doing, and some of the top agents in the market, in the DFW market. And they're going to show you how to buy and sell. We're going to get to that later in the show. We're going to get to the word on wealth here with our good friend Randy Nichols here shortly as well. Welcome to the show, Randy.
Thank you, Mr. Tuttle. Welcome back.
Yes, thank you very much. I appreciate it. I do want to mention this first. This kind of hit home for me because you guys heard about the tragedy in Libya. Randy, did you hear about that?
Absolutely.
Just all over Egypt. It's just interesting that it happened on the 11th anniversary of 9/11. Mm-hmm. And my business partner, his brother is very high up in the military, and he got flown out at 4:30 a.m. that next morning. Because they talked about that elite Marine team, elite kind of whatever, I don't know, the strike force team, whatever, just little deployment teams. He's in one of those, and they don't know where he went, couldn't even tell his own wife. It's just like, watch the news, sweetheart. And so it's like, man, that is home. We have a lot. My business partner's a military vet, so is a couple of my mortgage coaches, and of course, it's just my dad is, so there's just a lot of that there. But man, when you hear that, and that Chris Stevens guy, I was reading up about him. Because I'll be honest, I don't pay as much of attention as I should to that, but I was sure on alert when I heard that story. And he helped with the liberation of Libya and in Benghazi, where he was and where the consulate is. And a year ago, when Gaddafi was about to overrun that people, I mean, they love him. I found out there, and Americans. It's totally different than the rest, than Egypt and what happened over there. But here, it was, I mean, they really have a fondness for Americans because we helped them so much, and Chris Stevens helped that. In fact, he got sent home a few months ago. And he could not stay home because he wanted to help this people so much. So he went back. He's like, I'll be okay. And just a couple months later, this happened. And they do believe that it was actually, I don't know if you heard this, Randy, a lot of it was just protests, right? Because of the video. Did you hear about that?
Right.
There was this video. I actually couldn't, it's very hard to find that video, but apparently it was produced or put on by a man who says he's an Israeli Jew. Nobody can prove that. But in all the other areas that there were protests, it seems that it was because of this video. But what American intelligence now thinks had happened here in Libya was that was just a cover to have another group come in, and because they had rocket launchers here. They didn't have that in the other protests. You know what I mean? There was something strategic about this now that it's been a few days that they're saying, hey, this is something different. In fact, I wrote down what they had here. Oh, This is the group that they think has been in part. It's apparently an Al-Qaeda spinoff. It's called the Imprisoned Sheikh Omar Abdelrahman Brigades. So that was the sheikh that did the 1993 World Trade Center attack.
Right.
That's right. And so he did that attack, so they're calling themselves after him, and they believe now that that is actually what happened. So that stinking video, what I heard anyway, it was no good. The actors didn't even know it was supposed to instill Muslim hate. So extremists are bad wherever you're at. You know what I mean? And I have some very good Muslim friends, and it's just like, it's a horror to everybody, this kind of violence. And I am glad that our president stepped up and said some good things. You know, I don't agree with a lot of what Obama actually says, but I do actually appreciate how he went about this and what he said about that, because it's, I do. It saddens me. It angers me. I know it angers a lot of Americans and a lot of you out there. So that's stuff going on abroad right now. Just keep them in your thoughts and prayers and that family, and that we do sign some justice to that. And I hope that you realize, and the president said this too, that, hey, man, our freedom does not come at a cost. It is here because there are people that are willing to die and fight for it. And so I hope you remember that this week and on September 11th. I hope you remember that. Okay, turn to some stuff going on at home. Which, can you segue that? I don't think so. I just want a moment of silence. I'm serious. You know what I mean? I don't know what else to do. It just really breaks my heart. Okay, here in the States, jobless claims are on the rise. Again, so here's what happens. You've probably seen it this week. There's a little bit of a rate improvement, and it's something that on Wednesday, actually on Thursday at 12:30, the Fed came out. They made their comments, and they said some very interesting statements that I'm going to get to in a second. But I kind of want to go over a couple of key factors that happened. One being the jobless claims are on the rise again, and then the inflation is higher than expected. It's actually at 2%, which is the max threshold that the Fed wants, and they thought it'd be at 1.4. So everything is coming in kind of a little worse than expectations. But one of the things that I hear about or don't hear about a lot is actually deflation. But we know it's there, and Randy, I kind of wanted you to expound on that.
Absolutely. Andy, last week I talked a little bit about deflation. I brought up the subject because, as I said last week, you don't hear about it much because it's not sexy to listen to. Inflation gets more headlines.
But it is with your voice.
Oh, thank you.
Yeah,
that's great. That's perfect. That's another great segue. So let me give you kind of a heads up on a layman's term of deflation. It's a decrease in the general price level of goods and services. So if you stop right there and you think, well, wait, that's okay. That's actually good for me if something will cost less.
Right.
You know, gas is going up, et cetera, et cetera. So what's wrong with that? Well, what happens is that deflation only occurs when inflation rates fall below zero. Now, we're not there, but remember how low we've been.
That's right.
All right, and it can happen when inflation's kept artificially low. Now,
and artificially, when you have inflation without job growth, which is a big problem.
Right, there's multiple problems here. So, but here's the next piece. Don't get confused with disinflation, which is actually where we are right now. And what that is, that's a slowdown in inflation. So if inflation reduces the real value of money over time, conversely, deflation increases the real value of money. So again, you're saying, okay, well, what's wrong with that? Well, here's what economists generally worry about. They believe deflation is a problem in our modern economy because they believe what it creates is what's called a deflationary spiral. And what a deflationary spiral is it's caused when there's a shift in the supply and demand, what's called the supply and demand curve for goods and services. And so, in other words, if something's going to cost me less, then I'll wait. And if I wait, then production slows down because you have lower demand. And then if I don't buy it and I wait longer, then it slows down further. And then it causes the entire cycle to get into what's referred to as a spiral. And the price of goods and services fall, the prices of wages begin to fall, everything starts to go down, down, down. And so what happens is that when the consumer has an incentive to delay the purchases and consumptions, it causes a reduction in the overall economic activity. That's the problem.
And that's exactly right. That's where it goes down. And actually, we see that in the housing market. People, well, it'll just get lower. Oh, the price, we'll just wait till that price goes down.
We'll wait.
You don't want that. The more you delay, and it's our economy is, since we're built on consumerism, the more we save, which you should save, but there's a balance there, because if you save too much and you're not putting it into the economy, that actually causes more of a problem. Then people are going to lose jobs.
That's part of the issue again. And then the solution, or one of the
you got the magic pill for us?
Well, the professed solution is to inject more money in the economy. And so what has the government been doing over the last several years?
Right.
Injecting money into the economy. So we're walking a tightrope right now, and that's just part of the process that you talk about each week here.
That's right. And you got to be aware of that, which is why you need to to cut people off like Randy, which is what I just did. You're welcome.
Go ahead.
If you want to finish it,
No,
I'll
I
let you.
like it.
Okay, great, good. I don't know what it was, but I'll make up something. So the deal is that the reason you need to know these things is because the more you understand what's actually going on, the more you can make decisions that aren't blind, that are based on what's actually happening in the market. If you make, and we're going to get into this later, if you make decisions as a seller as if it's a seller's market and it's a buyer's market, then your marketing, your approach to what you're doing for your life, your finances, your family is not aligned with the market. Does that make sense? So you want to make sure that it's aligned. Otherwise, you're going to make decisions that may work, but not where you're at right now. And that's the difference. And so you need to understand some of these things so you can go, okay, well, let me go get with a professional, ask the right questions, and get on the right team that understands this so we can build a future together. And that's what we're talking about here now. And that's interesting. You talk about buying. They've been buying money supply, buying treasuries.
Right.
Well, on Thursday, they came out and said that they are going to continue to buy mortgage-backed securities, which are what mortgage rates are based on. And we talk about this every week. If someone says that mortgage interest rates are based on treasuries and they're the one telling you they're getting the lowest rate, well, don't listen to them because that's like watching the S&P 500 to find out what Coca-Cola is doing. You get an idea, but the only way to know is to watch mortgage-backed securities and actually specific coupons, but we don't have time to get into that today. The point is you got to know to ask the right questions to know if you're dealing with a professional. And in this case, the Fed made a very interesting move. They're going to still buy $40 billion a month in mortgage-backed securities, but they are not buying treasuries because of the issue of you keep buying that and you're sucking up this supply. Well, guess what? You have to have these auctions. You have to end up selling that. So you buy it up, but you got to sell it. You're just stockpiling the supply. And then what happens is we get too much dependent on foreign investors trying to buy that. We don't have a good auction. It weakens the money supply for everyone else, and it causes overall economic slowdown. So it's the tightrope that Randy was talking about. So we're in an interesting, precarious situation, but you right now do have some things you can take control over. And we're going to get into that coming up here with Randy. We're going to get in specifically about your financial house in the face of these kinds of things going on overseas, going on here in our own backyard. What can you do about that? What can you do today to build your financial house so it's strong no matter what is happening in the market? Well, we're going to talk about that with Randy. You're listening to Tuttle Talk here on 1190 KFXR. You can reach us at 214-736-9696 or email me at questions@andytuttle.com. You can also catch all past shows at andytuttle.com or on our podcast. So you can, just look up Tuttle Talk on your iTunes or whatever. Coming up here, we are going to talk more with Randy about your financial house and what you can do in the Word on Wealth segment. We're also going to talk with Lee Hilton, our very own estate planning and elder law attorney. And then a little bit later, Nicole Smith and Carol Russo. Get ready. If I didn't say her name right, she's going to slap me, but don't you worry. I can take it. That's all coming up here on the 1190 AM KFXR Tuttle Talk, so stay with us.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Are you a property investor? Do you know the difference between a homeowner's policy and a dwelling fire policy? Did you know there is a difference and that your insurance company could deny a claim if you have your investment property on the wrong coverage form? A good agent knows the difference and makes sure you do too. Let's face it, the financial well-being of your investment property is very important. Your education about proper insurance coverage does not have to be long and drawn out. Want some help? Call me. I'm John Allen with Texas Community Insurance, and you can reach me at 214-736-9696. Once again, that's John Allen, 214-736-9696.
Andy Tuttle here, host of Tuttle Talk. Yeah, I really am thrilled to get to speak to you every single week and bring the truth about our local real estate market. A lot of the stuff you hear in the news is based on national numbers, and it really doesn't mean much to us here in Dallas. So if you want the inside knowledge about what's going on in our real estate market, that is exactly what I'm here for. So give me a call, 214-736-9696, 214-736-9696. Whether you're looking to buy a home or you're looking to sell, you want to refinance or even invest, I can help you make an educated decision about what's going on and what's going to be best for you and your family. It's easy. I will give you the real facts. My team is going to give you the facts, and you're going to decide from there, right? That's how that works. So give me a call. I'm here to help. 214-736-9696 or visit me at andytuttle.com.
Why do people prefer to do business with Fidelity National Title? Some people say for the high-level security we offer through our solid financial strength. Some say they trust our history of excellent service, but most say it's our passion for excellence that keeps our customers coming back. Put your trust in a company that stands the test of time and will be here tomorrow. To learn more about Fidelity National Title, visit fidelitydfw.com or call 877-862-9111.
Welcome back, Dallas. You are listening to Tuttle Talk on the Real Estate Radio Network. I am your host, Andy Tuttle. You can reach us at 214-736-9696. That's an off-air number, so you won't be surprised getting on the air, but you can talk to us about anything regarding the show, real estate, or your financial wellness at 214-736-9696. Become a fan of the show at facebook.com/Tuttle Talk. And don't forget, this is a big deal. You want to text 72727. So pull out your phone, pull up your text, 72727, and then type in the comments, Andy T, and you are going to be entered to win a free month of electricity. We'll say that if you missed that number and that deal again, we'll say it a few more times throughout the show. So make sure you text that. It's very exciting, and it's going to be fun. It's brought to you by our friends at Utility Concierge. In fact, they can help you find the best deals on all your utilities, whether you're buying or refinancing. They'll negotiate all that for you. They do it all for free. They work with the vendors to make that happen, to make sure you're getting the best deals on your cable, your security, or your electricity, your internet, all that stuff. So it's a great company, and they're helping us with this, which is very nice. Okay, the Word on Wealth segment today is brought to you by our actual very good friend, Randy Nichols, over at Spectrum Financial Group. When you need to build your financial house, which is what we're talking about here, or you have an advanced portfolio that you want to maximize the profits on, and you really have some advanced strategies going on, Randy is the guy. That's what he does every day, work with CEOs and CFOs and business owners to help them strategize and grow their business and their portfolio and their wealth. And he is the professional over at Spectrum Financial Group. And Spectrum Financial Group actually has been helping people get there since 1901. So let's get into, Randy, this segment here in the Word on Wealth. And actually, before I get to you, you know what I want to do? I want to get with our very own estate planning attorney and elder law expert, Lee Hilton. Lee, thanks for being with us.
Thank you.
Okay, so now we've gone through a bazillion of these. I think we're actually on the 7th estate planning mistake most people make, correct?
Correct.
What is that one?
The 7th mistake is not preserving the tax deferral benefits of a retirement plan.
Okay, so the tax deferral benefits. Okay, that's a big one. What's that all about?
When a non-spouse beneficiary inherits a retirement plan, they're allowed to take that money out over their lifetime.
It's like a kid, a non-spouse.
Right.
Okay. A family, any other family member?
Any other family member other than the spouse can take it out over their lifetime.
Okay.
But what happens in a lot of situations is they will call the person that has the IRA and they'll say, Mom or Dad have died. What do I need to do to get the IRA? And the investment advisor will say, send me the death certificate and I'll send you a check. Now, if you had a check for $100,000 on your coffee table, you would do the responsible thing and put it in your checking account, savings account, investment account, most likely.
Always, of course, yes. Never spend any of that on shoes for the wife.
Anyway, once you put it into those accounts, we lose the ability to take it out over their lifetime.
Okay.
So, in effect, it's game over once we've cashed the check or put it in an account. So it's very important to alert people who are inheriting those retirement plans from you that they can actually take it out over their lifetime. So
they can get they're getting taxed at a lower rate on that, correct?
Correct.
Because you're not getting, for a big $100,000 tax or check, you're going to get taxed a lot more than if you take it out in small doses over time. Is that what you're talking about?
That is very correct.
Okay. That's very important stuff there.
Right.
So do you have any examples of besides that? So let me get on this here real quick, because I know that people in an IRA, is that going to be different if they're getting it out of, let's say, a 401k, or what are the other challenges that they get into with that mistake that people don't know about? Because that could be a lot of money.
Mm-hmm. It could be a lot of money, and like you said, it could put them in a higher tax bracket.
Right.
One of the things that I talk to clients about doing is putting those accounts into a retirement plan trust.
Okay.
And what that has the benefit of is it alerts your beneficiary that they can take it out over their lifetime. It also, if they're irresponsible, you can actually make them take it out over their lifetime.
So you can set that ahead of time. So like, look, when I pass, I want this inheritance. If I think I have an unruly child, let's say, or someone that I don't think is going to be responsible with money, I can say, look, this is you're going to over this many years, this person's going to get this amount of money.
Correct.
Okay. And so that's what it's about. It sounds like it's about more getting in, we call it in front of the house in our business, but basically being proactive when you set that up front so that if you're unsure if your kid's going to do necessarily the right thing, you can set that in a plan.
Right. And the other advantage to putting it into a trust is we can preserve the principal for the grandchildren. We can also protect it from the divorced creditors and lawsuits.
Right.
So we can keep it in a protected environment. Now, a lot of people know that retirement accounts, while you own them, are totally protected from creditors.
Right.
They're also totally protected when your spouse inherits that retirement account. But once they go to a non-spouse beneficiary, they're no longer protected from creditors.
So the solution is put it in a trust.
Mm-hmm.
And doesn't that, I mean, a trust typically when you're the beneficiary, but that's another tax deferment strategy right there, correct?
Correct. It keeps there from being a second estate tax when it goes down to the grandchildren.
That's a huge thing. People know how much those is, and I don't know how it is in Texas. I actually forgot because I do some things nationally, but it can be up to 50%, right?
Right, it can.
And that's an enormous amount. So you had $100,000 or $500,000. My gosh, I just went down to $250,000.
Right.
If you put that in a trust, are you telling me that you can keep that $500,000?
You can keep that, and you can take it out. Yeah, you keep the $500,000 on the taxes, and then also you still pay income tax on it, but
Right.
you pay it over a longer period of time.
Ooh.
Because if your non-spouse beneficiaries inherit enough, they could actually be up in the alternative minimum tax.
Exactly.
And they could pay extra on that end.
Yeah.
We had a lady one time that inherited $2 million in IRAs from her husband, and back then there was a penalty for an excess distribution from an IRA. And she was required, the way she inherited it, to take it in a 5-year period of time. And so she was income taxed on it, she was estate taxed on it, and then there was a 15% excise tax on it, and pretty much that ate up 85% of that IRA.
That is horrible. That's exactly what you have to get with Lee. If you have an inheritance you want to pass down, or maybe you're in a situation where you are going to be getting an inheritance and you want to make sure you do the wise thing and keep that money and not lose 50%, 85% of it, then call us at 214-736-9696, 214-736-9696, or questions at andytuttle.com, and we will get you in touch with Lee, and she will talk with you about how to set up that trust that protect your assets for you or your inheritance you want to pass down for your kids or one that you're getting. Lee, thank you so much for being here, and as always, I know you do two things better than anyone else, and what are those?
I hope you protect the two most important things in your life, everyone you love and everything you own.
Thanks a lot, Lee. Appreciate you. Randy, we talk a lot about foundation and about your financial house. Right? I want to get into, and I know we go over it every week, but what are the pillars of your financial house, of that foundation?
And you've heard me say this before, there are traditionally 4, but I add a 5th and make my caveat. They're referred to as the protection mechanisms, meaning insurance or insurance-type products, meaning life insurance, disability, income insurance, and then a liquidity fund, that's the third one, and then the fourth is where Lee and other attorneys come in, that's the legal documents of wills, trusts, power of attorney, medical power of attorney, financial durable power of attorney, et cetera. And then the fifth one that I throw in that's most people that are working for an employer have employee benefits, major medical, et cetera. If you don't, as I've said previously, again, if you're a business owner listening, that's the fifth pillar. You really need to make sure you have that health care in place. Those MRIs and surgeries and so forth and so on are expensive, and we all know that. So those are the pillars: life, disability, income, emergency fund, legal documents, and the employee benefits.
And real quick, because I think this is important, emergency funds, what is the standard? What should you have in your emergency fund account?
Here's what we believe. We want you to have a minimum of 6 months of your monthly living expenses. We'd prefer you have 12, but let's be honest, as we talked again previously on the show, it's tough getting people to save and accumulate. And again, you've heard me say this. This is the no-touch fund. This is not the vacation, go to Mexico, lay on the beach fund like you did last week.
That's right.
That's a different fund.
Wait, that was an emergency.
No, that wasn't an emergency.
I needed a vacation.
Right.
Very
so
bad.
we want a minimum of 6 months of living expenses.
That's very important, and just hear that, because don't be daunted by 6 months. If you don't have 6 days right now, you need to be changing your habits. I'll tell you that. That's just, you have to buy one less coffee a week. My goodness, $5 a pop, that's $20 a month. I know that's not a lot, but you've got to start shaving expenses because it starts adding up. It's the little decisions that make a big difference later on. So start now putting money away. It doesn't matter if you can't do 10% right now. It doesn't matter. You have to put away something. Make a little sacrifice now, put it in that emergency fund, and start building. In a year, you're going to be like, hey, I have a month. If you're already there and you're at 3 or 4 months and you are in that, which a lot of our clients are, that you just haven't made the decision to do that and you've put it in too many other investments. We have a lot of people that you're out in all these kind of stocks and buying all this stuff, but you don't have 6 to 12 months of reserves, then you need to stop that. Don't buy that next penny stock. Go and put that money in reserves, and that's what you need to do. Okay, Randy. So this is interesting to me because I find this so fun and perfect for today's show.
It is perfect for today. So we're going to give you the credit, by the way.
Oh, are you?
Right. I'm the lucky guy who gets to talk about the ladies, the professional women who need some advice from a big picture. But let's give you the credit because it was your idea.
Well, that's great. I was going to tell everyone it was your idea. So let's just say that it was my idea because that's the truth of everything. Right. Really, even if it's not my idea. I think it's very nice of you to say. So it's true. Today, I know we were going to talk about building the walls and building the roof. We're going to get into all that. But today, because there are unique challenges that successful women face, and because we have such beautiful and talented, successful women on the show today,
yes,
it seemed very appropriate that we would focus on those unique challenges that they face. So, Randy, what are some of those challenges?
Yeah, here they go. First off, it is true. Today's woman is amazing. Ladies, I get to talk to you directly today. You juggle. Yes, you nice. Juggle changing and growing roles in the workplace with responsibilities on the home front. On top of this, you have made deliberate decisions to care for your family that may have sidetracked your career and personal investment potential. To top that off, generally, you're living longer. And you're living longer than your partner, and not only have to provide for the here and now, but also for the future, which can include providing for parents and kids.
Time out, because, I wonder why they live longer, because I know I had so much stress to my wife's life with mostly my stupidity and lack of listening skills with her. I'm very good at listening to other people. So it's amazing to me that even through that, you live longer.
It just demonstrates a high level of tolerance.
That's exactly right. That pain tolerance that's meant to be given for the child at birth, he has to waste it all on me. Anyway, go ahead. Sorry.
Well, okay, so look, consider that longer life expectancies can necessitate more money for a comfortable retirement. And saving shortfalls due to career and family situations sometimes beyond their control mean that their assets need to work smarter. So, without a solid foundation, which you keep referring to, and the right guidance in the process, you may find yourself and your family coming up short. So,
because a lot of times, let me just recap, you got women basically have more responsibility now. They have more responsibility now than ever.
Absolutely.
And still, sometimes, unless you are in a great business like a real estate business, you make less than a man for doing the same work.
You're talking about things I'm going to talk about.
Okay.
Stop it.
Okay, I'm stopping it right now.
Yeah.
But I want to say, so if I'm recapping, but going forward, that the more responsibility now, so it's more important than ever to have your assets working correctly for you.
Right, and follow me on this. Many women live in the present because they're focused on today's pressing responsibilities, and that's at home and at work, and they're feeling divided for caring for themselves, their families, their future.
Gotcha.
And so with financial security perceived as a future need, they often put that off, and when in fact they should consider their future needs now. So unfortunately, relatively few women do. And as you just said, thank you for stealing my words, women typically work for less money than men, causing a potential income gap, and they live longer, which we've talked about, and therefore require more funds when retired, resulting in an income gap. So their money needs to work smarter. When women retire early, their pensions, other retirement, Social Security contributions, those are all affected, and as a result, they're left with less money to retire on than the man who had a longer career.
Right.
Okay? So while working, women are often more likely than men to make shifts in their careers for flexibility. We've seen that over and over and over. And while the decision may make their life more manageable today, it causes financial vulnerability in later years, particularly for the woman. And however, the good news is that today women are not in the dark about their financial vulnerability. And it's shows like this that allow us to bring the subject to the surface again, and again, like I say, run up the red flag. So let's have a sound financial strategy. It's easy to displace planning. We've already talked about it. On your list of competing priorities, you got to convince yourself that women oftentimes convince themselves that injuries, illnesses, and leading to financial shortfalls are remote, but in fact they are too real. And so given today's economy and the reality of what women are facing, women at any age will benefit from a sound financial strategy. So your strategy should address wealth accumulation and financial exposures like loss from disability, or injury, illness, or death. And one thing that I brought up in our first show, the need for long-term care when you're older. It's the number one bugaboo going forward in the financial world. How are we going to deal with that? So long-term care needs later in life. And even though many employers provide a measure of some of this security through their corporate-sponsored programs, it's not all. So you need a trusted financial professional who will listen and help you with the effective approach. Considering your needs and let me say one thing. People really need to pay attention to obtaining a predictable income in retirement. Predictable income is a key thing, along with growth potential and liquidity for unexpected expenses. So choose a financial professional who understands you, what you want, and how you want to be worked with. And I'm going to give you the last piece, Andy, which you'll love. Hard to say. Epictetus, if I'm pronouncing it right, or Epictetus, is a Greek philosopher. And he said, we've been blessed with 2 ears and one mouth. Use them accordingly. So find a financial advisor that listens.
I love that. That is very good advice. If you want to get in touch with Randy to go over your financial house in more detail, to talk about long-term care, the foundation, or how, especially if you're a woman right now, those unique challenges you face, and have someone that does listen. And thanks for listening to me in my own personal financial life and my wife. Was very helpful to us, and I do really believe everything that you say, and I appreciate your wisdom in my own personal life. Make sure that you call us at 214-736-9696, and I will personally get you in touch with him. You can also email me at questions@andytuttle.com. He does great work. Our clients trust him. I trust him, and you can too. You're listening to Tuttle Talk on 1190 AM KFXR. When we come back, or I should say coming up, we are going to be talking now, finally, to the real estate gurus we have been telling you about. Nicole Smith and Carol Russo will be with us here when we'll talk about how to sell your house right instead of having it sit, and what you need to look for if you're a buyer in this marketplace. So stay with us.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Are you a grandparent? Do you want to make sure the assets you leave to your children make it down to your precious grandchildren, and your children don't lose them to divorce, creditors, or lawsuits? I can help you make sure your assets make it down to those precious grandchildren. You can reach me at 214-736-9696, 214-736-9696. I'm Lee Hilton, and I help you protect the two most important things in your life: everyone you love and everything you own.
Do you have an insurance strategy? When is the last time you had a policy checkup? Do these sound like odd questions to you? Well, they might if you are used to hearing insurance agents talk only about all the money they can save you on your insurance. Saving money is important, but with insurance, saving money on premium may cost you big dollars on claims. Why? Because not all policies are created equally. So, if you come across someone who does not have a clear insurance strategy, or you yourself don't, they probably need an insurance review or a policy checkup. And John Allen with Texas Community Insurance can help. He is trusted in the industry, and he has helped me and many of my clients over the years save tons of money and get properly insured. Call 214-736-9696. That's 214-736-9696, and we will personally introduce you to John Allen to get that review, get that checkup, and take care of your needs. You can also reach out on Facebook.com/Tuttle Talk.
In the Metroplex, there's only one station you can turn to for the Savage Nation. Join me, Michael Savage, weeknights at 6 to 9 p.m. on 1190 AM KFXR.
And we're back! Dallas, every week. It's going to happen. I was so pumped up for that. It just gets me going every time. You are listening to Tuttle Talk on the Real Estate Radio Network right here on 1190 AM KFXR. I am your host, Andy Tuttle. You can reach us at our off-air number, 214-736-9696, or become a fan of the show at facebook.com/Tuttle Talk. And also, you can text. Don't forget, text 72727 and text Andy T to that number. So text Andy T to 72727, and you'll be entered to win a free month of electricity. That is super exciting. I am joined now by two very successful, very lovely ladies here and they actually work an office out of Southlake. Is that correct?
That's correct.
Nicole, welcome to the show.
Thank you.
Carol, welcome to the show.
Thank you very much.
Yes, thank you so much for being here. Okay, let's get into this. What did you lovely ladies do before you got into the crazy game of real estate? Carol?
I was working on my master's degree and was a marketing director in the cellular industry and had a brilliant idea to get into real estate instead.
Wow, so were you just getting bored? You're like, this is not for me? Is that what happened?
A change of location and a great time to start up a new business. And that was 16 years ago. Seems like a million years ago, but just 16.
Well, that is true. So where were you at? Where did you live before?
In Dallas, and then moved around quite a bit and came back because this is the best place to be.
It's true. Good point. That's good. That's very true, Carol. Nicole, what about you?
I was in pharmaceutical sales before I got into the real estate business. Now I'm a fifth-generation Texan.
Yes.
So land ownership is a big deal to our family.
That's right. And understanding that we can secede if we need to is part of your generation, too. We're part of your fifth generation as well. We're the only state that will be able to do that, by the way. So get ready. Don't mess with Texas in more ways than one. All right. So, Nicole, then how did you get started in the business then? Same thing?
Same kind of scenario, just seeking more freedom and flexibility as I had two small children at the time and just wanted to have a career with no limit of helping the people that needed my services.
That is a beautiful thing about real estate, isn't it? You can really, the sky's the limit. You make what you're worth and you get an opportunity to really help people. Did you find that when you went into real estate? I'm just curious. Do you even remember how that first year was? Was it, because that was 16 years ago, so that's the middle of the 90s, right? Mm-hmm. So that was a whole different type of market.
True.
Totally different set of tools to use to not only to market the properties that we are entrusted with selling, but also the buyers. I mean, that was pre-internet, pre-realtor.com.
Right.
And so a lot of more responsibility at that time was on us actually finding the property.
Right.
Today, that's the easy part.
Ooh.
Just people can find it on their own. They've got the app on their phone where they can pull it up, all the details at the curb. And so they don't necessarily need us to find the house, but certainly what we do today is totally different than what we did 16 years ago.
Okay, so let's dig into that because I actually had a little question written down about that. But, most people think that is the biggest piece. They haven't changed. Like, well, I can find the home on my own now. What do I need an agent for? I don't need to pay an agent, right?
Oh, finding the exact home is just the tip of the iceberg. We could drive by and find a great home. Where the professional realtor comes in is working out the repairs, negotiating the contract, and taking it all the way through the 30 or 45 days until we get to closing. There's so many things that could fall apart, and that's where your professional realtor really comes in handy.
I totally agree with you there, by the way, because so many times, let me just talk about, I was actually going to talk about sellers first, but since you brought it up, we're going to go buyers because I don't like it. Be flexible. On my side, when clients get like this and hey, we do our best to have them work with an agent because what we say to them is if you don't work with an agent that does their job brilliantly, it's very difficult for us to do ours brilliantly. And honestly, what happens is you suffer. You are the homeowner are the one that has a bad experience, that is stressed out, that doesn't know what to do. I'm talking about the contract wasn't done right. They don't actually know the right place to close. They don't know about any of the things going on in that process. And you think you do, but you don't. And you don't find that out until you get to closing in on us. What happens is, the homeowner, you ask us, hey, can you help me with the contract? Can you do this? Well, there's limited things what we can do. And there's limited responsibility that the title company can take. And so without a realtor that can help you with all of that part of the process, which is a lot more now. That's the thing, like you talked about, right, Nicole and Carol? The weight went from finding the home now to all the regulation and all of the pitfalls that can happen during the process, right?
Absolutely.
Very true.
So, Carol, speaking of buyers in this marketplace, what should a buyer be looking for right now?
There's three things that differentiate a home. It's location, price, and condition. And so the buyer has to find the right mix of those three things, not only for what's going to suit their needs for their family today, but what is going to sell 5 or 10 years from now. We get a call maybe from that same buyer 5 years from now. They say, I got transferred to California. I have to go this month, and I want to take my family and kids with me now. If they bought the right house in the beginning, they can go ahead and, probably have a quick sale. If they did not and cheated one of those 3 items in the beginning to find maybe a great deal, who knows what's going to happen when they go to sell down the road.
Okay, so that's interesting because back years ago, of course, way before the 2011 financial crisis, when we saw the big, ever since we've seen kind of the bubble pop, that wasn't really a concern. A lot of locations, I just want to find a house that has all of this for me, this pool and this size home and this size, right? But now you're saying that it really is something that you need to focus on is, hey, is this going to be sellable?
Absolutely. Not everything does sell. You'd be surprised when we look at the true statistics of what homes are listed and what really sell. As you look at your probability of sale, it's really not what you might expect. It's more about a 50-50. And, at a lower market, you might have even less than a 50% chance of getting your home to sell.
Okay, so location. You look at that, and everyone gets that location. You hear all the time, right? But what's one of the things that determines a good location is, and this is actually in the investment world too, is there one big job? Like if you lived in Richardson 10 years ago or so, and you lived right next to TI, and then it went down, all those houses vacated, right? And so you had foreclosures and the market went down. So are there multiple jobs that are bringing in business and buyers into that area? So there's one of the factors, location, good schools, right? What else helps you determine a good location? Those are the 2 main ones I know, right?
Ingress and egress is important, what you drive by on the way to get somewhere.
Very good.
It's also important to have your professional that works for you do a full analysis. Very few people really want to be that big house in the neighborhood. So what you see in a vacuum that you love online and you go in and it's beautiful until you compare it to the spectrum of what else is going on in that community, it may or may not be the best deal. It may look like the best price per square foot, but relative to other things in the area can certainly be a consideration you need to take under advisement.
That is a very good point. Real quickly, price versus cost. You can have the lowest price, but it could cost you the greatest because you get the lowest price on the house, but like you said, the cost of living in that area, the fact that it doesn't have good ingress, egress, doesn't have a good location, doesn't have good jobs, it's not sellable. So the cost later. Okay, so it was a location. It was the price, of course, is a component. And did you say something else, Carol?
We also talked about condition a little bit. That there's so many things that go into that: the outside, the interior, the updates. We always suggest to our sellers that they do a little bit of updating every year rather than wait until they go onto the market, because your realtor may come over to your house and suggest a $25,000 improvement be made before you put it on the market. But if you kept up with that condition as you went along, as you were a homeowner, you're all set when you go to sell. And we never know in the volatile market that we are when that transfer call is going to come in.
Okay, that's good. Here's another question I get a lot. People think now that you don't have to have a local real estate professional anymore. Maybe you can just get someone, maybe either your aunt that lives down in Houston, or because it's all about looking online and all this, it's the same problem. But what is your take on needing a local real estate professional?
I think that is priceless. And of course, the best way to find that is to connect with folks that you already know and relate well to in your immediate market to find out who is going to be able to serve you best, who's up to date on what's going on in that community, who can advise you what kind of factors are going to be involved in selling. It's really easy to take pictures and take measurements and write up some adjectives like fantastic and fabulous. But at the end of the day, there are other things going on that you can't always tell if you're not actively on a full-time basis connected with what's going on in those immediate communities. In our area, in this whole Dallas-Fort Worth area, it's not always real obvious when you go from one community to the next or one school district to the next. And so it's those variables make a huge difference, not only in the value of the home, but the marketability of that home. So if you're working with someone that's not intimately aware of what's going on right then, you very well could be either A, leaving money on the table because you're not asking enough, or you may be setting yourself up to be very disappointed because what that expectation would be based on that agent's perspective is not real with what's going on where your home is located.
You're listening to Tuttle Talk here on the Real Estate Radio Network. You can reach out to us at 214-736-9696. And if you're a buyer right now, we want to get you connected with Nicole and Carol, Nicole Smith and Carol Russo, 2 real estate experts in the South Lake area. And so if you are a buyer right now looking at trying to figure out the best way to buy, the best steps to take to go buy in this marketplace, call us, 736-9696, and we will get you connected with these two ladies. Nicole, do you have an example of the difference between needing a local real estate expert, like where if they didn't have one, maybe they didn't know the area or anything like that?
I think the most obvious one that comes to mind recently is minerals have been a very important factor. Mineral rights have been a very important factor in Tarrant County and the other 16 counties in the Barnett Shale. That's not prevalent necessarily in Dallas County. So even though a Dallas agent conceivably could get in their car and drive across the airport, they don't always know the factors that are most critical to what's going on right there. So the agent or the client that they're representing is somewhat at a disadvantage because they don't have access to the information that the same agent who's very much involved in that community could share.
Well, that's interesting. Like Texas, they don't know. So are you telling me that have you ever had an agent that has been out there on one side of the transaction or the other and just found out, and didn't know that there were mineral rights issues?
You'd be surprised. And there's many, just not minerals, schools and issues between school districts. A certain neighborhood is split between two school districts. That can happen any place. Any county, any city has boundary disputes. And if you're working with an agent who's not aware of that, it could definitely affect your value of your home, what school you go to. Yeah,
that's so true and so important. That's another reason why we don't like to work with part-time agents, just because they don't know. There's so many changes all the time now in the laws and everything else, and the mineral rights in certain areas and all the issues that come up that you need to have an expert. It's the bottom line. You get what you pay for. You wouldn't go to a discount doctor to go check on your health problem, right? Well, don't do the same. Don't do that. Don't do a discount person for your finances, and definitely don't do a discount person for your real estate, because that's going to cost you. You're not going to find out till 5 years later, and you're going to be underwater, just like a lot of people are, because you didn't listen. And that's why we bring great agents every week like Nicole and Carol on this show, because you need to deal with an expert. That's another reason, speaking of experts that people don't think about, is title companies, because you have to have a good person that understands title, understands how to clear title. Hello, you got to have clear title, or you're going to be in a world of hurt later on. And you need experts that can make that process easy, that have extra follow-up and technology to make this process as a team. There's 27 people on average working on any individual transaction. Such a big component of that is title. That's why we use Fidelity Title, because they make our lives easier and help us give the memorable and enjoyable experience to our clients day in and day out. And it's just what this is all about, is doing that. So I want to switch, Nicole, to sellers. Now, is this a seller's or a buyer's market right now?
That is a great question. And really the only way to answer that is to do an in-depth analysis on the individual home. Now, as a whole, in the Dallas-Fort Worth area, our market peaked here in 2007, declined a little bit in 2008 and 2009, and has been pretty flat in 2010 and 2011. But 2012 is just rocking. We are year-to-date up 16% in demand. So our demand is up 16%. The supply of inventory, the supply of homes available, down 22%. So as that funnel continues to expand, that difference between the supply and the demand, there's going to be that feeling of scarcity.
Right.
So far, we haven't really experienced a lot of recovery as far as the prices that we saw in 2007, although we're getting there.
Right.
But certainly as these trends continue, we anticipate and we hope that we've already been at the trough.
Right.
And so now is just such a great time to buy with interest rates so low, the ability to get the mortgage financing. Carol and I both highly encourage our clients to get fully pre-approved with
so smart.
An incredible mortgage company like yours, specifically yours, because that's so valuable to us to help the clients that we serve get the best deal they can. And now really is the time to do that.
Nicole, that is very important. And we don't have time this time. I'll have to bring you back to talk about some of those things you brought up. But it is so important to get pre-approved before you have the clock ticking on a contract. There's ways to improve your score to get a better interest rate. There's ways to find out things you didn't know about to make sure you get the house and all your finances are in place so that you set this up where the debt works for you and not you work for it, and that you get the home that you really want and get it at a great deal. So on sellers, staying on that, there are some things, you guys call it sell versus sit, right? There's some ways you can help your house sell versus sit, right, Carol?
Absolutely. Staging is very important. As realtors, we bring in a stager free of charge to our clients. it's just so important that the house look like a product. You know, when that sign goes in the yard, your house becomes a product, just like a box of Cheerios on the shelf. Make sure you buy that house.
You had a marketing background.
Absolutely.
So I can see this. So repeat that again.
That's just how I'm programmed.
That is, nobody says that. That is great. Say that again.
Your house is a product. So your home is what you live in 24/7 until that sign goes in the yard. Now you're a product on the shelf. So when we have a buyer in a certain price point, there might be 7 other homes that buyer could look at. What is it that's going to make your home stand out to be the next contract that comes up? Because we may have 2 homes in a certain price range a month that sell. Let's make sure that yours is the one.
That is huge. Now, we're short on time, but Nicole, could you take 30 seconds? Because, you work with buyers. You work with sellers. You're hearing this today. They have fantastic tools and an understanding of how to help you sell right at the right price and sell quickly. And they do that because they understand how this market works and they understand marketing. But they also understand how to help you buy. What I need to hear now is that you don't stop there. That's the short time, but also post-closing, you do something that I have not heard any other realtor do. Can you just briefly tell us what that is?
The main thing that Carol and I do is we take care of the clients we serve before, during, and after the transaction. So as long as Carol and I have both been in this business, the majority of our business is from past clients and referrals from those folks. So we keep in touch with them on a regular basis. We convey this market information to them. We make ourselves available as a resource to people so that if they need anything having to do with home ownership, whether it's maintenance or improvement, or for that matter, the healthcare professionals that we recommend, people know that we're connected within the community and we make a special point of really getting to know the people we refer business to, so that when you call us, we're not just sitting down at our computer and pulling somebody up out of thin air. We're referring people to our people that we have personal relationships with.
That is huge. No one does that. Most of them just give you a vendor's list. We do something very similar on our end. The first agents that we've met that do it on their end, they are a resource for you. You want to use them, call us at 214-736-9696 so we can get you in touch with Nicole and Carol. Ladies, thank you so much for being here.
Thank you.
Thank you for having us.
Yeah, you bet. My pleasure. Okay, you're listening to Tuttle Talk. I hope you've enjoyed this hour. We are yet again out of time, mostly because I don't know how to not talk, and I just can keep going long. But I have to tell you that really quickly, I did extend the bet with my wife, so I bought myself another month to lose another 12 pounds. Of course, I had to double the risk. I'll tell you about that later. You can email me about it. But either way, if I lose this bet, I am in big trouble. Don't forget to go to yourmortgagereview.com. Take 5 minutes, complete that, find out if you can save money on your home. It's a no-cost loan that we would structure, and of course, it's no obligation to fill that out. We can find out if we can save you money. People do it every week, and we do save you money every week. Text Andy T to 72727, Andy T to 72727, and get entered to win a free month of electricity. How awesome would that be? You want to do it? Make sure you text that number. If you'd like to discuss anything related to today's topics with me directly, call the show's off-air number, 214-736-9696. Next week, I'm going to have 2 very special real estate experts in the East Dallas area. They also happen to be my mom and dad. Oy vey.
You're a brave soul.
I am a brave soul. I hope we get through the week and survive the show. It could get nutty. I would like to thank Lee Hilton, Randy Nichols, and my very special guests, Nicole and Carol, for joining me today. I'd also like to thank Danny Miles, our patient production director, and the entire family here at KFXR. That's it for today. Race Talk is coming up next. This is Andy Tuttle for the Real Estate Radio Network. We'll be back here next Saturday at 11 o'clock. Save the station, and thank you for listening to Tuttle Talk, where we're making financial intelligence a priority in our community. Have a great weekend.